Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a particular pattern which I looked at a few months ago on the 3-month chart, but it's also now playing out on the daily chart. It played out very successfully on the 3-month chart, and the question is, will it play out on the daily chart? I'm also going to have a look at the gap that's developed on the Bitcoin price. And as per usual, I'll have a look at the 60-day cycle as well to see exactly where we're going in the short term and the medium term. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to look at this particular pattern which no one seems to be aware of, and I want to take you back to the beginning of 2023 when I highlighted this pattern. It's actually called the Hikkake Pattern. And if you want to read about it, if you want to find out more about it, if you Google it, you'll see that it's a pattern that involves between 4 and 6 candles. And so this is the setup I'm going to just show you on the Bitcoin chart. So back at the beginning of 2023, I highlighted this pattern, which is basically a big red candle, which you can call a Marubozu candle, followed by an inside bar candle, i.e. the top and the bottom of that candle is encapsulated by the top and bottom of the previous candle. And the third candle has to be a lower high and a lower low. So this is how the market traps the bears. So when this goes down like this, people think automatically it's going to go much further. But the price, instead of going down, it actually goes up. And the critical level is that on the 4th or the 5th or the 6th candles, the price has to break above this critical level of the top of the second candle. So this was 25,198, the top of this candle. And we closed on this 4th candle at 28,476. So this was the sign that we're now going to be going higher rather than lower. And this pattern is an incredibly powerful pattern which has a very high probability to play out. A similar pattern developed for the Bitcoin daily price as well. I want to just show you that. So now I'm on the daily chart with Bitcoin, and we've got a similar setup here. So we've got this Marubozu red candle to the bottom. We've got an inside bar candle encapsulated by the previous candle. Then the third candle is a lower high and a lower low. Okay, so that's the first 3 candle setup. Then the 4th, 5th, and the 6th candles, within those, it has to break the critical second candle's top, which is at 43,235. So we really need to close today. So we really needed to close yesterday above that level, and unfortunately we didn't do that. So while it's a 6 candle pattern, but some believe it can be a 6 to 8 candle pattern. So I would be waiting for at least today and tomorrow. If we break above this critical level of the 43,235, that would be a sign that we've now bottomed out here. Now, does that mean it's tangible proof that it's definitely going to go higher? Of course not. But what these patterns do is add many points to the probability scale. Some add only a few points to the probability scale. This one certainly adds quite a lot to the probability scale. And I'm going to show you another one that's actually just crossed over and given us a golden cross. So while there's no guarantees and certainties, what they do is they play into a narrative. And when you're balancing the probabilities out, it gives you a certain amount of confidence that it's going to go one way or the other. Just like the 3 months pattern played out to the upside once it broke the second candle, this could do exactly the same as well. And it's the psychology that goes into it here. Because this particular candle, the third one, which is a lower high and a lower low, what it does is it takes out many of the longs and their stop losses before moving to the higher side. Because everybody's expecting the price to go lower, and of course it can do that. But the way it's playing out, this particular pattern is a bullish pattern at the bottom of a trend. And this may well be what's playing out here. So keep an eye on a close above the 43,235. Okay, so the second pattern I wanted to show you, and you may well have heard other YouTubers actually talk about this pattern. I don't think anybody really talks about the Japanese candlestick patterns like the Hikkake pattern, but this one is a golden cross on the 50 over the 200 on the weekly chart. So as you can see, the historical perspective is that it's never happened before. So we're just going to have a closer look at this. So first of all, just to give the importance of this particular pattern, we can see here that we had a death cross at this point, i.e. the 50 went below the 200. And this is the extent to what it played out. And this cross occurred while the price was also around the cross itself. So be aware of that. Whenever you see these crosses, you need to know where the actual price is in relation to the cross. Because here, the reason why I'm not exactly incredibly bullish about this is that in the long term I am, but in the shorter term I'm not, simply because the price is so far away from the cross. So what this is really telling me is with the price so far away from the cross that it's already baked in to the price action here. So I wouldn't be expecting in the short term to just do this. And of course everything is possible, but we're talking about probabilities. But certainly for the longer term, this is a very important development. You can see that the momentum is really building up on the larger time frames for the market to go maybe sideways and then up, but we may well have a correction coming to the downside yet. Okay, so I'm going to look at the CME futures gap, which I showed you many weeks ago when it was first forming here, and I drew this dotted line, and that is at 39,640. So I would expect with a high probability for this price to take out this gap first. Of course, it can go lower before moving up, but certainly these gaps do get filled on the whole, not 100%. There are many gaps still around the 3,000 and 5,000 and 7,000, around those levels, and they don't look as though they're going to get filled. But these ones, the fresh ones, do tend to get taken out most of the time. So just keep an eye on this. Okay, so moving on to the 60-day cycle. So today we're on day 38 of the 60-day cycle. And so far, having bottomed out here on the 11th of December, we've certainly had our move to the upside, and before the midway point we made a high here, and after the midpoint we made a higher high over here. So that told us this is a right translated cycle, and there was no follow through here. But what we have done is to have a mid-cycle low currently going on and playing and coming back to virtually the low of the start of the cycle. And the low of the start of the cycle was at 40,181. So we can't break this, otherwise we'll have a failed cycle down here. So if the CME futures gap is going to be filled, it's going to have to break this. But as long as it doesn't close below this, we should be okay to go back up again. But that fall below the 40,181 could well be the sign that we're going to go lower. And we have to keep in mind that in the last three cycles, we've had a 40 and a 50 and a 40% correction before each of the last three halvings. So there is a high likelihood, if it's going to play to the historical narrative, that we go below this level here and have a correction of 30, 40 or even 50%. It may not look like that at the moment, but that is definitely on the table. But if we were to have a proper right translated cycle, then this price needs to be basically moving up towards the 60-day cycle before we make a 60-day low here. That would be very bullish if we can go back above this price here. Then that would be a signal that we're going to go into the halving on a very much a high. Because if you look at all the previous halvings that we had, we can see that before this halving, we got around about a 50% fall before the first halving. Before the second halving here, we got a 40% fall. And the third halving here, we got another 50% fall. And I'm ignoring this COVID situation fall. So the big question is, will it have a 30, 40 or a 50% correction here? Only time will tell. But these orange lines have been a very strong support all the way through the previous cycles, and currently that is at around about 32,000. So if it was to be a big fall, 32,000 would be a very good strong support going into the halving. And certainly if you look at the Bitcoin miners, they are actually front running. The Bitcoin miners may be giving us a clue in this matter, because most of the Bitcoin miners actually topped out on the 27th of December, while Bitcoin here topped out on the 11th of January, which was the day after the ETF decision. So since then, the Bitcoin miners have actually come down by roughly around about 40+%. So Marathon, which is one of the leading Bitcoin miners, was down 47% to yesterday's low, and most of the miners are following suit there. A sign to look out for would be if the Bitcoin miners start to actually come back up before Bitcoin does, just like it was falling before Bitcoin did. That may well be the sign for Bitcoin to start then moving up a little bit later on a delayed lagging basis. And of course, Bitcoin will do what Bitcoin does, but these are just the signs that I'm pointing out may well become very important. So just something to look out for. It's something that gives people an edge when they really don't know what's happening with the Bitcoin price. There are other factors and other charts that give us a clue as to what Bitcoin may do. So this would be a very important sign that if we actually start to turn around here, and one important thing to notice with these Bitcoin miners charts at the moment, if you look at the size of this body of the candle, then you can see the next one is slightly smaller, the third one's even smaller, and yesterday's close was very much a spinning top. So what you've got is an exhaustion of sellers into this market. It doesn't mean that it can't go lower, but the size of these candles is giving us a very important clue that there are less sellers in this market. And the bearish momentum is getting less and less. And if you look to the left here, and this is something I was pointing out in the members video yesterday for my members because they were looking for entry points for support levels, etc. So one of the things I pointed out was if you look left here, you can see there's a very strong support level, which the price for Marathon and the other Bitcoin miners is coming to. So basically you're coming to a support level and the candles are getting less and less. The bearish momentum is getting less. And if you look at the RSI and the stochastic RSI as well as the cycles indicator down here, we can see that they are also giving us some signal that we may well be bottoming out here. It doesn't mean that it can't carry on down here as this comes down further. Of course, that is always a possibility. Please remember there are no guarantees or certainties. It's all about looking at the little details and coming to some sort of a conclusion, because nobody has a crystal ball of what's going to happen tomorrow. Because sometimes I get in the comment section people saying that, oh, but you said this 2 years ago, 3 years ago, and I'm always left wondering why people take what I'm saying as the 100% guarantee that it's going to happen. So all I'm pointing out is that if you look at the RSI, it is on the downward trajectory here. It hasn't gone below the key level here, so there is some room there for it to go. But if you look at the stochastic RSI, the momentum is very flat, and that reflects better with what's happened here. And the cycles indicator, you can see that we haven't got the cross yet, so there may well be a little bit to go, but certainly for the longer term, somebody with a 2-year view would be picking up a little bit, nibbling away, maybe 5%, 10%, and if it goes further down, nibbling away here at 5%, 10%, 20%, whatever. And when you've averaged out down here, that is a better price than paying $31 up here. If you look at another Bitcoin miner, you can see these big candles followed by smaller candles, followed by even smaller candles, and now followed by spinning tops. So this one is the Riot Platforms. So you can see most of the Bitcoin miners seem to be losing their momentum to the downside and may well be presenting a wonderful opportunity to pick them up cheap. And if it's something that you're interested in, then you can join us on the private members section. In the miners, this is what we cover there. We do a Bitcoin analysis. We do 60-day cycles, which then are a prelude for our swing trades that we've been doing over the last year. We also track the long-term portfolio, which is really the main focal point. It's a journey of 2 years. It's a very arduous journey, only for the courageous and the brave, because there are going to be ups and downs like there are currently at the moment. But if you've got a 2-year mindset, the Bitcoin miners may well be providing one of the greatest opportunities in this crypto space. And we also do members requests in terms of whatever charts you want me to cover. And these are the objectives that we have for the Bitcoin miners. So we're following this 4-year cycle. We have a long-term portfolio that we follow, but what we do is to try and add to this long-term portfolio by 2 methods. One is the ratios method and one is the swing trades. And this has proved so far very, very successful. So last year, our portfolio grew by 295%. Now it's presenting another good opportunity with a big discount for the start of 2024. And our target of $1 million, we got up to 434,000, and the current target is actually 5 million for the end of this bull market, wherever that's going to be, either at the end of 2024 or at the end of 2025. And if that is something that's of interest to you, all you have to do is click the join button, and for the price of a coffee per week, you can join us on this 2-year journey towards the end of the bull market. Okay, so we can leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.